live. Thank you for sharing your Wednesday night with me. I got Miss Potts in the house tonight. Yeah. I started like 30 seconds early. I see you. Make sure you chat so I can respond. We're talking about investment strategies. Yes. We're talking about everything. Yeah. Found me some of that music that I don't have to worry about them saying it's infringement. Yeah. Oh, thank you, handsome man. Love you, Michael. Oh, that's so sweet. Look at my love of my life. Thank you so much. How you doing, Sadie White? Got Miss Davis and Miss Potts. Like both of them with roots in Georgia, I think. Isn't that something? Y'all are doing it. Sadie White. Oh, how you doing, Miss Neville? Talking about investments, one of your favorite topics. Y'all, I love it. I gotta get y'all in here with me. So y'all can be stuck. So y'all can be stuck in the house. You got an hour. Let's see if Miss Potts can stay right there for an hour. She's gonna be like, oh my goodness. Can they see me? What's going on? It's so good to see you. We got somebody new, Miss Davis. Somebody new in the house. Yeah, so good. You gotta watch it with Miss Davis because sometimes I'll put her in timeout with when she doesn't mute because she's in ATL and they get loud down there. They party.
Okay, you gonna go on mute now?
Yeah, that's great. Oh, thank you. You're so sweet. You're so sweet. Thank you. Thank you. Indeed. I see y'all. Make sure you make a comment so I know that you're there, but I see you. Thank you for logging in. This is going to be an exciting night. We got Mr. Jones. We got Georgia. We got Virginia. We got the nation's capital in the house, in the studio with me. It's a good night. How are you, Mr. Jones? We are talking about investments. I got to make sure that he can. Well, I hope your audio is okay. Mr. Jones, can you say something?
Greetings, everybody.
Perfect.
All right, all right.
Perfect. I have my hair all covered up. You weren't sure it was the right place, right? You're like, where's the afro? What's going on? What's going on? Exactly.
Look good.
Oh, thank you. Thank you. Second compliment I got tonight. I'm blessed. Yes, indeed. Michael gave me my first one. You gave me my second one. I'm truly blessed. We're going to rack them up tonight, y'all. Say something nice to Miss Davis so she can have a compliment for the day.
Hey, Miss Davis. How are you?
That's your biggest fan right there, Miss Davis.
How are you?
I'm good.
That's indeed.
Yeah.
That's Miss Potts.
All right.
Miss Potts, this is Mr. Jones, Miss Davis. You know, Miss Potts, she is a new member, has her own business, got a lot of stuff going on. We can't wait till she's in there with us on Friday afternoons. She got some exciting stuff. So this
welcome.
Yeah, it's gonna be fun. It's gonna be fun. Yes, indeed. So yes, indeed. Oh, y'all so good. So investing is not the short game. Investing is for the long term. Investing. You know, and one of my tips, and we'll get to it, but is about the difference between just trading and investing. See, some people think just because they buy something and then they just trade it real quick, that is investing. It's not. Investing is when you buy something based on its future value. That's why we don't get excited when we have these things going on in the current day, because we're buying based on what they're going to be worth down the road when we really need it. You know, when we really need it. So if you really need it today, you shouldn't be investing in it. You should be saving your money. So you save your money for what you need today. You invest your money for outpacing inflation, for protecting your style of living, so that you can live like Jenny Jones. So you can be having a good time. Look at her. Jenny been around the world. She's been traveling. She was all over the place. Happy birthday, Jenny Jones. Yes, indeed. She had a birthday and everything. Look at it. We know.
Happy birthday.
We know. Indeed. Oh, yeah. Don't forget. Next week, we're celebrating my birthday. It will be my birthday eve next week. My birthday. My birthday is on March 10th. Do you know that March 10th is National Harriet Tubman Day? Did y'all know that? It is the day of freedom fighters. That's what I'm talking about. I did not know that in 1990. And I didn't see you down there, Star. And thank you for saying hello. Wow, look at y'all. Oh my goodness. What is going on with Miss Hodge in the studio? Y'all have made my day. It's like it's my birthday. My birthday is next week. Look, y'all better be here next week. Because if you don't come next week, then I'm going to know you only, look, you came this week because of the money. Because you like the topic. Next week, you got to come for love. So let's see how many people show up for love's sake. For love's sake. Love supersedes money, right?
All the time.
Yeah, like right.
All the time.
All the time. You see, y'all love me. Y'all been good to me regardless of what the market has been doing. Exactly. See, if y'all didn't love me, you wouldn't be showing up today. You'd be like, that girl, what in the world? I tell you, the stock market is having an interesting response to this Russia-Ukraine conflict, they call it. What you doing, Miss Hodge? Come on, Trinidad. Come on back. How'd she get out? She said, oh no, she's not gonna put me up there. We had her. I think she slipped out. Okay. You gotta represent for Trinidad. You gotta stay. We got Trini right there. That's a Trini lady right there. We are officially
Hi, everybody.
What? Global.
Hi, everybody.
That's the Trini. Y'all call her Trini Queen right there. Hey man, that's so good. That's so good. Right, Star? That's right. So, so what I was sharing is that we love you. We're so glad you're here with us. Indeed. I don't know why it keeps flipping you like that. Cause cause Trinidad can do that. Look, she's sideways. All of y'all are wrong. Miss Hodge is the only one that's right. Just so you know. So let's look at some long-term investment strategies. Michael said, "Happy birthday, Jenny." Now I have to get their comments. Oh, everybody loves Miss Jones. Help us get free. Yes, indeed. Because I was talking about Harriet Tubman Day is on my birthday. That's right. We're freedom fighters, and I'm fighting for your financial freedom all of the time. Good evening, Ms. Williams. So these are some key things that as we're developing your investment long-term strategy, and my first point was just to say that, remember, investing and trading are two different things. Feel me? Okay. Like, trading is just basically turning the investment market into like a casino. Like there's people who do day trades and they just want to get in and out all on this, in the same day. They just want to make everything. But I don't see investing for the long term like a casino at all. Does anybody think of investing as gambling? I hope you don't. I hope that as you see us develop your portfolio, you see that I have a science behind it. You know, these key things that we did. Like my first point is, you're like, nah, JB, you on to like the fifth point. But diversification, a key strategy to long-term investing, diversifying your portfolio. Amen. Happy Sunrise Day. Yes, indeed. Sunrise Day, Lady Jones. Oh, look at Renee Go Lightly. So yes, you are. Thank you so much. Renee, I can't wait till we get her in the studio one day. So along with Mr. Johnson. Mr. Johnson's trying to move to Florida, and then he thinks that he doesn't have to hang with us anymore. What's going on? We have people all over the world. So the importance of diversification when it comes to a long-term investment strategy. What do you think it could be? Well, it's because diversification is about maximizing all of the different asset classes. So an advanced form of diversification is asset allocation. What percentage we put in bonds, what percentage we put in stocks, what percentage we leave in cash, what percentage, you might want in commodities, or what percentage you might want in alternative investments like real estate or cryptocurrency assets. So we have to decide on the asset allocation, which is part of diversification, a key strategy. Also, another key area there is to understand investments. Like to be in something for the long term, like with any relationship, what do you have to do?
Commit.
What keeps people together?
Commit.
Oh, that's so cute. Not that one. Exactly, but you're right. But what helps you be committed to something? Understanding it. Like the other day when you were talking about your business and you were saying, I love to write. You understand writing. You get it. So that helps you be someone's not on mute. I don't know. I think it's Miss Davis. Look at her because she looks innocent. You know what's her deal. Deal. So the understanding investments is a key part. Like I meet people all the time and they go, I don't know.
It's not me. I'm on mute. I'm on mute.
Who it is? Just everybody make sure I'm on mute and then we'll be good. I can't mute you because you're in the studio. You can do whatever you want. You're in the studio. Thank you. So understanding the investments will help you be able to go through the ups and downs. When I diversify and I put you in different asset classes, you have to understand what I put you in so that you can commit. Because when you don't understand it, you end up talking sometimes to, someone that has no idea what they're doing, just a friend at work. And then they tell you, because they don't even understand. They definitely don't have a license. And then you do what they advise, you know what I mean? Because you didn't understand your own investments. So a key to long-term commitment, a long-term investments is understanding, which is a key part of Afroeconomics. So all of these are part of Afroeconomics principles. The first, diversification, is about your legacy and planning and the whole planning process, commitment to financial independence, as well as knowledge. Knowledge also a principle of Afroeconomics. And then, so I just wanted to say, everything connects. So that's why we do so many things, especially in our members only, discussing the markets, discussing different types of investments, discussing things because I want you to understand the investments that I have you in, so your chances of staying in it so that we can have long-term success increase exponentially because you understand what you got. You have it, indeed. So then a third point is to know the market history. Know the history of when things happen, like conflicts or war, or is this normal? Like if you don't, then you think you're the only this is only happening to you. Oh no, this is horrible. But that no. If we look at the history, and I'm going to share a screen with you really quick, because I had a call today. I get calls all the time from different products. They have marketing people. So today I got a call from Vanguard, and they were like, "Do you need anything?" And I said, "Send me something. Send me something interesting." So it's probably really small for you. It's hard for me to enlarge it on here, but the talks about geopolitical sell-offs. And of course, if you're a member, just email me and I will send you this picture so you can have it. And the geopolitical sell-offs are typically short-lived. And this just shows like 1962. Within 1 year after the Cuban Missile Crisis, within 1 year, the market was back up 26%, using the S&P 500 in this example. And then the only one where after a year it was still down was 1974, when President Nixon impeachment proceedings. It really pulled down the stock market. Isn't that something? But 79, Iran hostage crisis, within a year it was back up. Soviet invasion of Afghanistan, within a year it was back up. Iraq war, within a year, almost 30%. Of the Arab Spring, Egypt, 2011, still up. It was up 3%, still got out of negative to positive. 2014 was the Ukraine crisis of 2014, and look up 12% within a year. And then this is the Brexit vote, 2016, up I think that's 14 or 18% up within a year. So I will make sure that I share this with you in detail. But the point of that is that we need to understand short-term volatility versus your long-term goals. How does the market typically respond in times like this? Just think, just things like that. I think one of the key things that I should put on here that I don't have in my 10 is because I was really focusing on you. But the truth of the matter is, people need to have a financial advisor. Look at how much it feels for you to get that from me as your advisor. As a registered investment advisory firm, it is my job to facilitate and empower my clients, my members of Afro Economics. So put yourself in a situation. That would be a key thing. It's funny, I didn't even really think about that as a major strategy for long-term investment success, is to develop a relationship with an advisor that you trust, so you can be in it to win it for the long term. I would feel good, and I humbly say this, that if I met someone like me that's been in financial services for 3 years, for 30 years, I'm really young. Feels like 3 years, 30 years, I would be so excited to develop a relationship with them. Because a lot of the times you meet people and they're grown, but in reality, they haven't even had their license or don't have a license. aren't really in a position to help you as a registered investment advisor. So we need to make sure, first of all, that the person is licensed and required to look out for your best interests. What are they? What do they do? There's so many different titles. Like, everybody in the world is a financial advisor. I think the best way to protect yourself is to make sure that they're regulated and have a license. I'm not, you need somebody that has to be accountable to the United States government, has to be accountable to for regulatory bodies, so that if you have to do something to protect yourself, they have guidelines. And too often, especially our community, we're settling for less than we don't have to. We don't have to. The licensing process and procedures and requirements are created to protect you. Stop going around and stop settling. And the membership, what? Individual membership is just $1 a day. Don't get me started. You deserve $1 a day. You know what I mean? For your financial future. So and then you have the free. So you can participate in the members only for 30 days for just free. So just empower yourself. Check out. Key part of investment success over the long term. Partnering with someone that you trust, that has a history, that has a license, that's in it to win it with you. Ready to be on your team. A fourth point is develop a strategy and stick with it. Right? Develop a strategy and stick with it. Like, and I say that's because of understanding, having a team, trusting your advisor, being committed will allow you to do that key thing. Develop a strategy and stick with it. Zach, goodness gracious, Annette, how you doing? What in the world? We pulling people out the woodwork tonight. It is definitely Ash Wednesday. It's a religious holiday for sure. God's just like, brought us all together. Amen. It's so good to see y'all. I'm so blessed. I went to an Ash Wednesday celebration one time. Have you all ever been? Has anybody ever been? You've been one time too? I know it. Did they go like this and go, "You are nothing but dust"? They were like, you are nothing but dust. They might not do that in DC. But in Virginia, they were like this. They said, "You are nothing but dust. Get out of here." As you were leaving. Yeah, that's what Deborah said. Yes, that's what they do. Exactly. And now I thought about it. That's all they are. They said we're spiritual beings, We're spiritual. Our body is nothing but dust. Oh, Miss Charles just came from an Ash Church service. Oh, look at us. We are doing it. Miss Charles, did they say you are nothing but dust? We are nothing but dust. We are blessed. So developing a strategy and sticking to it. We have to develop investing goals. We have to investigate your time horizon. We have to see, how we want to allocate it. How we want to allocate. How much time you have for it. And remember, I'm talking about investing. When we're really serious about investing, I want you to tell me you have at least 5 years. I really want 10, but at least 5 years for it to perform for us. Now, that doesn't mean we're not going to make changes within 5 years, but it's more of we might change, but it'll still stay invested. The hard part is when you need the money. You said I don't need it for 5 years, but you actually need the money in a year because you go, "Oh, I forgot. I want to buy a car." So we got to sell out and buy something. It's different when we sell a loser and we switch it into a better investment. So we're still investing over the long term. We just made changes, but once you pull it out, it's out. So a fifth point is to know your risk tolerance. And the way I like to investigate your risk tolerance is to do the risk analysis, a software, and it allows you to use an algorithm. It asks you specific questions, and the algorithm, artificial intelligence, will put all of those factors together, and with different weighting, it will ask you like how many years before you want to use the money, or how are you if your money went down by this amount, would you pull it out of the market or would you stay the course? And then it goes, what if it went down by this amount? And then you do those things for me, and then that allows me to put together a portfolio that actually falls within that risk tolerance that you told me you would be comfortable with. And we need to make sure that we update that at least every 6 months. At least every 6 months, just to make sure that, we're staying in tune with what you want to do. So another key is knowing that risk tolerance, but also reviewing the investments regularly. So that's where at least that 6 months. But you all know that what we meet at minimum at least once a quarter. Some of you I meet with every couple of weeks while we're working on a specific project. But, some of you once a month, some of you once a quarter, some of you every 4 months. But we have to make sure that we meet regularly. I have made a commitment to meeting with you. You dominate my calendar. That's it. I don't spend any time on my work day talking to people about Afroeconomics. When we have these events, they can find out that way. They can do the free membership. They can find out that way. But my time has to go to you and what we're working on. It has to. I remember when COVID first started, I would spend like 8-10 hours a day just talking to people, random people, about what they were thinking about doing. And I said, I have to refocus on just the members and what you want to do. Because you have made that investment. You have taken that step about your financial future. The least I can do is make sure that you get the attention you deserve. We need that. We have to have it. So reviewing the investments regularly is a commitment of Afroeconomics. And then also knowing the cost of the investments. I like to look at how much an investment costs, even if it's through work, because you need to get an understanding. So for a long time, work plans didn't show you their expenses. They wouldn't show it. So you might notice now they're showing you, because regulation, see, that's why regulation really can benefit you, said show the fees. So however I am compensated is reflected on your brokerage statement. If it's not, if a fee is not on there, then a fee did not get charged. That's regulation. If a fee got charged, a fee is on that statement, plus a fee notice. But so when you have these investments, you have to make sure that you understand what is the cost of that investment. And unfortunately, our community has been dominated by buying high cost investments. Companies, for example, Primerica, having very high sales charges on the products, focusing on the small investor and making it harder because of their large fees for us to get the performance that we deserve. Afroeconomics literally has pushed that out the way, but it's up to us to get to it and discover it, that we have options, and stop allowing ourselves to get robbed. But you have to want it. I can't want more for you than what you want for yourself. Good morning, right back at you, South Carolina, Miss South Carolina. Absolutely. And so check this out. The That's funny because Miss Charles has relatives where Benita Daniels actually lives. They don't even know it. Can't wait till they meet each other one day. Small world. And they came in there at the same time, are in the chat room. So know your cost of your investments, review your investments regularly. And my 8th point was trading. As I mentioned earlier, trading is not investing. So if you're thinking short term, like 12 months or 2 years, then that's not investing. That's just trading. So if you want to trade, you really, would be better served, and you just might want to talk to me, about what is really best for you. What is really best for you. But you can be trading and actually incurring a lot of expenses that you don't even realize. And a lot of these alternative investments, cryptocurrency and things like that, are charging people a lot of fees to get in, to get out, to do transactions and things, but people don't even know. They're not even asking. So it's cutting into your return, just from the fees that are involved, just because you're doing all these transactions. So we need to be aware of the difference, again, of investing versus trading, and how you're viewing investments. And hey, I got mad respect for that. I'm mad respect. Some people just want to trade. That is cool. But as an investment advisor, my goal is to focus on wealth development over the long term and financial strategies. Dropping the losers. I think it's become very important because remember, I mentioned that I wanted you to be committed, right? Mr. Jones, I was like, oh, I want you to understand. I want you to be committed. And then now I'm saying, drop the loser. drop them. But I think it's important to know when to let go. So when we're having meetings, sometimes it may be best to let it go. Right? It might be time. We might let it go because we might need that money to buy something else. Correct? Versus just sitting there allowing it. And I would think that sometimes, too many people who don't actually have a financial advisor to get feedback on, they hold on to stuff for way too long. Way too long, because they don't know what to do. So they just keep it. Like, there's probably people watching now who have stock certificates in their house back when they used to make stock certificates. Now, most companies are not going to issue a stock certificate, not a major corporation. You're going to it's going to be held somewhere. So they have this in their house and they don't even know what it's worth. And the last thing they saw where it was going down to nothing. So instead of saying, oh man, I better figure out how I can sell this so I can at least get this for it, they just don't do anything. They could be just frozen. Good evening, Rosita, right back at you. Just too afraid maybe to do anything, so they just let it go. I don't know what you think, Miss Gray. Why do people do that? Just nothing. I mean, have you ever seen that? Not for yourself, maybe, but just where they have something and they've always had it, so they just keep it, even though it's not doing it. It's not serving them. Like people that get a CD And the CD keeps renewing and renewing and renewing and renewing and renewing. And when they first got the CD, they said, I'm going to decide what to do with it after a year. And then a year went by. And then another year went by. Another year went by. Now you into long-term territory. So now you just like, your real return, meaning the interest they paid you, minus the taxation, minus the inflation rate, has you into negative territory. Who knows what our approximate rate of inflation now is for the United States? Approximately. Let's just use the Social Security rates. How much was that? Y'all remember? 5%. So people on Social Security got a cost of living adjustment of 5%. So if you have an investment that you have to pay taxes on that is paying out 1%, how negative is your real return? Your buying power, right? Because you got to still pay taxes on that. So you lost half of that. Like, you know what I'm saying? Then you lost the ability, what it buys is going down in value by 5%. That's what the inflation rate means. You need to have 5% more money to buy the same thing, that same loaf of bread. Since Russia and Ukraine make a lot of the wheat that people enjoy, I don't know if it's there for I think they provide some to the U.S. too. So, like, what if the cost of bread goes up 50%? I mean, that would be something. That would be something. I bet Miss Potts, people figure out how to make their own bread. Oh, but you couldn't, because you still couldn't get the wheat. Remember that, when COVID first started and people couldn't get the yeast? They couldn't get yeast. And they were everybody was home cooking, and they were they wanted yeast and they couldn't get it or something. That's funny. But the interesting thing is that we have to realize really what a loser is, because just because the statement says that it's a positive number doesn't mean it's actually you're actually winning either. That's scary to think, isn't it? So sometimes when a person is like, I got this credit card and it's charging me 30% interest, and I have this $100,000 earning a half a point in their savings account. I mean, do you think they know how much money they're spending? How much they're losing? They have $30,000 on the credit card. They're paying 30%, and they're getting a quarter point on their savings account with $100,000 in it. What do you think, Ms. Davis? That's sad. But it happens all the time because they go, I gotta have that. They feel good having that money there in the savings account, but they don't realize that you're sitting there paying 30%. Huh? Yeah, they're paying 30%.
Not a good idea.
Not a good idea. I know, and it happens every day. But those are the kind of things that we can discuss through together to help you increase your, confidence about different financial moves. But if credit card companies can get everybody
and cases. Yeah, so let me say this. Some, like you were saying with CD and so forth, it could be that maybe the CD purchase, let's say 12 years ago, it's just been sitting in your account. Yeah, each year it matures on the 24th of this number.
Yeah.
On my savings, because I had one forever and ever.
Wow.
I think it's 5.20 something. Well, now Well, now it's dropped was, and it's just sitting right there collecting dust. And that could be many of us.
Yes, just like that. Just like that. Because we're caught up in everything and we don't see it as a loser because you're getting something. You don't see it as a loser. But that's, a part. Everything you have is a part of your asset allocation. So if we have 10,000 invested, but and it's actually, doing well. Say the market, has done well. You had it in there 10 years, your 10,000 possibly doubled. And then here you go, you have the majority of your money growing at a quarter point. It pulls down your entire performance of your whole portfolio if that when you have the majority of it. But a lot of times you're not, you may not even be telling me about it or your advisor about it, that you have this going on, and you might want to make sure that you do, and then make sure that you call and get us scheduled. If anything that we're talking about kind of triggers something in you and like, you know what, I got to get a hold of that. I got to, do better with this. Make sure you respond, because the worst thing is when just you go, oh, shoot. And then 5 years from now, you go, I know, I remember that night when you said, and I did that. But unless you do something about it, nothing changes. Correct? Correct. So drop the losers, and you might have to talk through really what the losers are, because sometimes you think you're winning, but you're losing. And then my final point is that profits are more important than taxes, even though taxes are important. I want to minimize your tax liability, but I want to achieve a high return on your investments. That's my first priority. That's my first priority until you tell me otherwise. That I want to achieve high returns as the primary goal, minimizing taxes as the secondary goal. So, so we have to constantly be aware of both, because it might have certain moves, like might have certain moves that you're making that that you might be making them because of tax purposes, but it's not really the best for you from a profit perspective. So we got to be careful, when we're talking about the investments, that we focus on what's going to be the most profitable moves that we can make first, and then talk about the tax consequences of each thing that we do. If I sell this, will I have capital gains? If I sell this, if I have capital losses? If I sell this and it's at a loss, do I have any gains so that I can benefit from this? Because that's called tax loss harvesting, because we want to make sure that, because you can only write off your losses if you have gains that are recognized in that same tax year. But that's part of our tax strategy. But the first thing is we want to make sure that we're moving your value, your wealth forward. But we need to be talking on the regular so that we understand that. I think that we're constantly ever growing. I'm totally committed to a lifetime of learning, and that I truly believe that it has helped me be a better advisor, because I've been committed that every time I meet with someone, I schedule the next meeting with that person. I used to close out a meeting and I go, okay, talk to you later. You don't say that and then we like get lost in the sauce. Now it's like, when we're going to talk next? You know what I'm saying? And that has been one of the best moves that I make, because Miss Gray and I need to talk. And the reason we haven't talked is because the last time we talked, we didn't schedule the next time we talk. So I'm gonna hunt you down. Chelsea's gonna be finding you tomorrow. But but definitely we need, that. So let's make sure that you talk on the regular, that you understand diversification, that you increase your knowledge of what you have, that you ask all the questions that you can possibly ask. My thing has always been that if you ask someone a question and they do not respectfully give you your answer, you're doing business with the wrong person. And I think that we do a lot of business, unfortunately, with the wrong people. And we're accepting behavior that's not working in our best benefit. But I have a commitment to make sure that I address your question because I've been treated that way so much in my life experience. That the only thing that I said that I could do in order to make things better for us was to provide what I always felt that I deserved. Because, as early as I was in my career, when I, was still in my 20s, when I started the firm, I had already been exposed to the negligence that so many people feel in our community when it comes to financial services. And there was just someone who was talking about in the gym the other day about Dr. Phil has a show out about, redlining and how Black people are treated in financial services. And I said to them at the gym, I said, that's why we need firms like mine so that they were like, well, yeah, whatever. Exactly. So that we can make sure, but it's true. You know what I'm saying? If we have options, like I think it was Yahoo Finance did a research study, and when COVID came in and when people were getting stimulus checks and things like that, a whole lot of people started setting up online brokerage accounts. And they did a survey and they started asking, specifically they were surveying like Black people, and they asked the Black people, are you satisfied with the service that you provide, that you're receiving? And they said no. So the majority of the people surveyed were unhappy with the service, but they're still there. Isn't that sad? So nothing is going to change for us until we get a better understanding of how we should be treated, a better understanding of how your money, what you should be doing with your money, and a better understanding of what you deserve. And most of the time, people are doing these things on an app, on their phone, no customer service, can't get any, help with it, losing money oftentimes, and paying more than they would have to pay, for membership. Especially since there's a free level. Look, but that's like so sad. But in order for us to improve our chances of long-term investment success, I think that these key principles that we talked about tonight have to be part of our financial life. Any questions before y'all leave me? Look at y'all. I know Miss Potts got a question. You just look like you got a question. That's so good. Look at it. Exactly. I'm not going to say, oh, you can't say that out loud. You scared your phone might not work. I mean, your speaker might not work. Say something. Say something, Jenny. Oh, it didn't. Oh, you might be muted though. You might be muted. But Jenny said that she had a fantastic birthday and the celebration was awesome. That's good. But anything additionally come to mind that has worked for you that I might not have mentioned that you think or that you do like or that has been unique about your experience, our experience together, or things that have worked for you as far as for the over the long term? What would you say, Miss Gray? Anything? Star, Miss Davis? Y'all ain't giving up nothing. Well, Star, you look like you were gonna say something.
I'm afraid to talk. I'm afraid. Yeah, I'm getting that.
No, you're not. Not on this side.
I can hear it on this side. But I'm looking forward. I'm looking forward to working with you.
Oh, that's so
and
positive.
So far, I've been with you since November, and I am learning a lot that I know will help me into retirement. It'll be a great benefit, and I appreciate you.
That's so positive. Thank you. I appreciate you. Thank you so much. Y'all so positive. Indeed. So y'all get scared because you don't like that echo stuff, the way it does that. Yeah. And I can't hear it at all. And when it records, I don't think you can hear it. Oh, Miss Davis said, "Happy birthday, Jenny." That's so cool. But don't hesitate, you all. Email me, everybody out there. The even that are watching, jb@jbbryan.com. Let me know if you have any additional questions, any members that want that crisis, a global crisis graphic that I shared. Just email me so that I can reply back to you and send that to you as well. jb@jbbryan.com. And I look forward to seeing everyone on Friday morning, 9 a.m. for our weekly members update, and Friday at noon for our business networking. We are doing it. We're on the move, y'all. And Friday night, having Afro Economics has been nominated for a community award. So, I'll let you know how it goes. I know it's like, thank you. It's like community service or community involvement, award from the Metropolitan Business League in Richmond, Virginia. Oh, thank you. So let's see how it goes. If I don't win,
congratulations.
Look, if I don't win, I'll find somebody to blame it on. Let's blame it on Mr. Jones. You'll take it. You take it because you can handle it. They say it's healthy. Always blame it on someone else. You'll live longer, less stress. Well, that's going to be great. So I'm looking forward to that. That will be like my first outing this year. No. Went to a comedy show. Second outing this year. Let's go out more is 2022. I'm a party like it's my birthday on Friday night. Since my birthday's on a Thursday. I appreciate you all. Have a wonderful week. It's not over yet, y'all. It's not over. Make sure you enjoy every second. Every second. That's right. Thank you. Thank you so much. Bye-bye. Y'all so good. Thank you. Good night. Thank you so much. Good night. Oh, thank you. Oh, thank you. Oh, y'all so sweet. My pleasure. Good night.